Hello, good afternoon. You're watching Closing Trades on ET now. I'm Anisha Jain. With me is Nikunj Dalmia. And for now, the market picture is not looking as pretty as how we started the day with. We were well in the green, cruising along that 23,400 mark, but from there, or rather 23,300, but from there has been quite a bit of tumble. In fact, the Nifty has gone below the mark of 24,000, and on an intraday basis, it went below 23,900. It's recovered a smidge from there, but definitely just around the 24,000 mark. Sensex took a plunge of over 1,000 points today. There are reports that talk about the intensifying tension between Russia and Ukraine, and that caused a bit of a nervousness in the market, and that really spooked the street a bit. Broader markets also, fall in tandem. In fact, India VIX just ahead of expiry has managed to climb up further. The India VIX is now above the mark of 15. It's a day of monthly expiry, so that's something which the street was expecting in any case. IT, the other ones under pressure today, so a TCS, Infosys, all of that will come up for you on the screen. You have some of the insurance companies which have taken a massive hit. So whether you pull up a, SBI Life or HDFC Life or Max Financial, take a look at that. They're down anywhere between 5 to 7% on reports that there could be, some kind of restriction with respect to the bank assurance, etc. So that has played a part. PSU banks and realty, that is something which is holding fort at the moment. We have seen good amount of recovery when it comes to PSU banks of late, at least 6-7% in the last few days. That's holding on, and real estate too is bouncing from the low. So not as pretty a picture as we saw at the start of the trading session, but Nikunj, nothing too bad as well. Just seems like there's still that nervousness in the market, and that is not letting it fire up yet.
I would not use the word nervousness, Nisha, because you have to bear in mind that you've seen a 1200 point rally on the Nifty. Yeah. And after a 1200 point rally on the Nifty, you have to deal with an F&O expiry. And that is something which I think is playing a very larger role. See, markets are not like looking for any kind of an, roar. All we were debating and discussing last Thursday is that how much more they would fall. So if you have to compare last Thursday versus today, at least it's getting more and more convinced that at lower level market has got a trading bottom or a floor in place. So it's a big departure, and purely that's the perspective which I would urge our viewers to look at. Where were we last Thursday versus where we are right now? In terms of news flow, well, elections are over. China trade has reversed. FIs have stopped selling. Earnings season, the worst is behind us. Festival season, initial flurry seems to be encouraging. So a lot has gone wrong for the market. But rather than really magnifying today's price action and assuming that, okay, every day we have, markets have a right to go up every day and they'll keep on going higher like they've done in 2022 and 23, I think that would be a stretch. For me, this market is consolidating, which is not a very dire kind of an outcome. Sandeep Sabral has been bullish of late, and he's been accumulating stocks both in large cap and mid cap. So Sandeep, we have come up in an impressive manner. Do you think this market has some more legs left?
I think so, because if you see, what people want is that earnings should also be strong and they should be able to buy stock prices cheaper. That will not happen. So you need some sort of negative news. So like the first and second quarter due to election, heat wave, delayed monsoons, I think there were a lot of factors at play, combined with high food inflation, which has impacted a lot of sectors of the economy. Now, many of these things are going to moderate, and as we sit to talk, maybe a year from now, a lot of these things might not be there. So when you get some disappointments, that's the time you get an opportunity to buy into the markets. I wouldn't be too negative. So I think the risk reward is in favor, and 2025 should be a decent year for the markets.
25 is going to be a decent year. The risk reward is favorably placed. But would you say that, Sandeep, even for the insurance stocks, they are coming under quite a bit of pressure because that restriction, perhaps, which Street is expecting on the on some of the businesses done by the parent and through banks is something which is kind of causing a problem. And some of those stocks will come up for you on the screen as well. What's the take on insurance, Sandeep?
Insurance overall as a sector has been a disappointing sector in terms of growth, profit delivery, as well as various parameters we measure in terms of which add value to the insurance franchise. So it's been sort of a stillborn sector, I'll say, where a lot of expectations were there, but then they have not yet really delivered. So I'm not looking at this sector actively as a potential investment opportunity.
Things are looking up, Sandeep. Are you basing it on valuations? Are you basing it on liquidity? Are you basing it on momentum? What gives you confidence that we are in for better days ahead?
Even markets have corrected, like markets collected 12-13% from the top, they are down 10%. Now, 3 year CAGR is nothing which indicates that there's euphoria except for some segments of small mid caps. That's a separate category. Secondly, there is too much talk of dollar continuing to rally and US markets continuing to outperform in the year 2025. Actually, if you look at positioning, trader long positioning in US dollar is at a 1 year high. US equities weightage in global equities and the overweight positions of fund managers is the highest. Typically, this does not indicate that that country will continue to outperform. It actually indicates the reverse normally. But most people take it as most people are trend followers. So they see that this has been the trend, so this trend will continue. That normally doesn't happen. And we could actually see emerging markets which have overall underperformed for some time could actually come back going forward as global interest rates moderate, as the US dollar stabilizes, and as the downside risk to growth subside, and potentially some global geopolitical tensions also subside. So we've already seen something happen on the Israel Hezbollah side. If post Mr. Trump taking over, there is some development on Russia, Ukraine also. I think so that also removes some lot of overhang on emerging markets as a whole.
Okay, point taken. We'll watch out for all of those macro factors as well. But just taking a step back and taking a look at the policy news break and exclusive that we have for you. After a slow start in the first half of the financial year, the government is racing to expedite the capital spending and has asked different ministries to identify critical infrastructure projects that can be accelerated. My colleague Prakash is joining us with the exclusive details. Prakash, the economy was suffering because there was this problem that government hasn't opened up its kitty that well. Is that expected to change in the second half?
Yes, sir. We are learning from our sources that the government has asked various ministries to expedite spending on key infrastructure projects. In fact, we are given to understand that the key ministries such as railways, road transport and highways, telecom, power, coal and housing affairs have been instructed to accelerate capital spending on key infrastructure projects. In fact, the government has reviewed over 1,700 central sector infrastructure projects. Various ministries have been instructed to identify projects that can boost capital spending. In addition to that, we are also learning from our sources that the finance ministry has completed consultation with the ministries on budget estimates for FY26, and it has been observed that the government spending needs to increase by more than 45% to meet FY25 capital expenditure target. Along with that, the government has also observed that the capex will reach 90 to 95% of the total target during FY25. However, this will be higher than the last year's spending in absolute terms. Sources are also confirming that a modest increase in capital expenditure is likely in capital expenditure target for FY26.
Sandeep, now the government will have no problems in increasing the capital expenditure. It could happen this year, it may happen in April, May, but that big surge in capital expenditure is coming. And that kept the economy going, Sandeep, post-COVID. The government did all the heavy lifting and you saw re-rating in defense, railways, any government-facing business. What happens next now? Because the fiscal situation, Sandeep, is good, which means they have ability to spend and they would like to spend. So what could be the big beneficiary when government spending comes back?
Government spending typically benefits many of the infrastructure segments. So we've seen that some significant announcements on broadband investments have been done through BSNL, which could also get funded by the government. Then there are a lot of projects coming on the hydro side, on the renewable energy side, even on the thermal side, investments on transmission towers. Road investments have been somewhat subdued for the last 1.5 years, especially in terms of order inflows. And there was a talk post this year's interim budget that the road awards will pick up, but that hasn't happened. I think that's another segment where the government could potentially make a push, because that tends to be high employment generating also. So high government spending will be good, but I think they have not been addressing the slow consumer demand aspect, which requires some fiscal stimulus or tax cuts, etc., which I think they are not inclined to do. I think we should only be happy if they don't increase taxes in the next budget.
Increase taxes? क्या बोल रहे हो भाई? Who's increase taxes, Sandeep?
Sorry?
Increase taxes? Did I hear you say increase taxes? We pay GST.
No, I said
we pay GST. We pay income tax. We pay how many? You know, I think in India, 60% of your income broadly goes directly, indirectly, right, Sandeep?
yeah. So and like it could be more also depending on what you consume. But the point I'm making is that they are not inclined to cut rates, although the economy needs rate cut, like some tax rate cuts or fiscal incentives for consumption to pick up. So what I said was that we should actually be happy if they don't increase taxes in the next budget.
Okay, point taken. Kunal, wanted your take regarding a couple of these buzzers. Amber Enterprises, on account of that Goldman downgrade, is down, and Honasa, which continues to fire up. Would you have a view on Honasa? Enough chart history?
So I'll skip Honasa, limited chart history, and whatever we've seen over the last 1 month or so for the stock was a very sharp correction and very mild kind of a bounce back in the context of the sharp correction for the stock. So my expectation is that the stock should drag down further. And bottom formation generally is a process which takes at least few weeks, few months for many of the stocks when they fall in such a kind of a sharp manner. Amber Enterprises could be interesting bet. The stock is coming back towards a very mild support point. I call it mild because the stock was consolidating over the last 1 month. So broadly the range for the stock was around 5750, 5800 as a support, and on the upside 6600, 650 as a resistance for the stock. So I believe that maybe closer to 5750 mark, if the stock holds on to that level, we can expect a bounce back.
Okay, point taken. Let's see whether that bounce back happens or not. Quick breather on this one. We'll be right back with more.
Okay. In conversation with our technical experts and Sandeep Sabharwal, markets are not at the highest point of the day. I could easily blame it on expiry. Kunal, there is a long list of stocks which will get included in FNO tomorrow. And interesting names, stocks which you relate to, but they're not in FNO. Zomato, Policy Bazaar, D-Mart.
Geofinance.
Sorry? Geofinance. So what happens now? I mean, when stocks come in FNO where price discovery will start, what happens to these stocks now?
So, the individual price action is a lot more differentiated. There is no, very precise kind of patterns that if stocks come back in or come into the FNO segment for the first time, that these stocks move into a very unidirectional kind of a manner. It's very differentiated, depends on the positioning of the stocks, how the trends have shaped up over the last few weeks, few months, etc. So very difficult to call it, but yeah, I think this could probably aid a lot of liquidity and many strategy-driven counters. For example, names like Geofinance, Zomato, D-Mart, etc. These are high liquid counters even in the cash segment. So an added advantage once these stocks come into FNO segment, I think it adds to the kind of strategy plates for many traders, at least in terms of the FNO segment. But no decisive kind of a rule that if stocks come into FNO segment, these stocks, they generally move into a very similar kind of a direction, that whether it's on the upside or on the downside.
Sandeep, some of these stocks are names you can relate with. Zomato, Policy Bazaar, D-Mart. But for the first time they move into FNO. And the price discovery is going to be very different. Sharp swings after numbers, immediate reaction to the news. What could change for, let's say, some of these popular stocks? Zomato, market cap 2 lakh crore. Jio, market cap north of 1 lakh crore. What do you see things changing? How do you see things changing for them now that they would be part of the F&O basket? Sandeep.
Normally, the liquidity improves. That's one factor which obviously is there. They become eligible to come into some indices, etc. So I think that's another part which is a longer term outlook where you need to monitor some of these stocks could come into some indices. And on the flip side, people have the ability then to play the stocks on both sides. Like right now, for most of the stocks, you can just play the long side if you are buying them, or if you are if you're short and it's only in cash, then you don't buy them. Here, if you have a negative outlook, you can actually play it the other side. And if your view is right, then the stocks could, on the downside also, you could end up making money. So I think price discovery overall tends to be better, especially if the market capitalization is high enough and liquidity is sufficient.
Point taken. I think we'll try and connect with our colleague Anurag as well to get you the latest what's happening in insurance space. Let's pull up some of those stocks and see whether there's an intraday recovery, because he's picking up from his exclusive sources, and these are the top IRDI sources who say no directive has been given to insurance on bank assurance business capping. Remember, that was the point that was causing nervousness and worry in the market. But if IRDI has not given any directive on any capping, that would mean some sort of a softening of sentiment coming in, and that's why some of these stocks are now slightly turning from the bottom of the day. So we'll try and connect with Anurag to get us more details on this story. Any directive, they say, will only be given after public consultation, and press release would be issued. So there's no use of speculating whether this is something which will happen or not happen. As of now, no directive has been given, and they will be very consultative in their process. Separately, we have Naresh joining us on the show. Naresh, at least on the charts, any recommendations for Maxfin, HDFC Life, SBI Life?
So technically, Maxwell looks the most interesting one because that has shown a lot of, say, relative strength in the previous moves. So out there, this correction is a buying opportunity. So closer to 1100 is a good entry point for the medium term.
That's a take coming in as far as some of these insurance companies is concerned. Kunal, if I can kind of interest you in this one as well, any sense in bottom fishing?
Not really. I think these stocks have underperformed. So I was looking at the weekly charts, and this is almost like the 8th or the 9th, almost like consecutive weeks for many of the stocks, SBI Life, etc., where these stocks are falling. And typically we expect that these stocks, whenever these stocks come back into at least a 1 week or a 2 week recovery, break past about their 1 week, 2 week swing highs, that's where we may anticipate a bottom formation. So it's always better to try and wait out for that confirmation rather than build on that anticipation to the stock, because the trend is on the downside. So if these stocks are bought into on declines, it's possible that the declines may continue for some more time.
Point taken, but let's now take it across to Anurag, who's been picking this story. Anurag, a very important one, because the street is worried that there's going to be some sort of restriction, but you are saying that there is nothing of that sort right now which they have issued, right?
Yeah, so as per the top IRDA sources, IRDA has not issued any directives to insurance companies regarding the capping of bank assurance premium, and if anything would be there will be a public consultation first, and after that only IRDA will go ahead, because we have seen that recently Finance Minister Nirmala Sitharaman and IRDA Chairman Debashish Panda has raised some concern about the mis-selling through bank assurance channel, but we have spoken to the top sources in IRDA, and they have said that till now, there has been no directive issued to insurance companies for capping of business through the bank assurance channel, because bank assurance channel is an important channel for life insurance companies. HDFC Life in FY24, 65% of their total AP premium is through bank assurance. For SBI Life, 52% of new business premium is through bank assurance channel. For ICICI Pru, 28.7% of their business is through bank assurance channel. So for life insurance companies, bank assurance model is the major channel for their overall business, and there was some concern by FM Nirmala Sitharaman from IRDA chairman Devashish Panda, but as per IRDA top officials, as per IRDA top sources, there has been no directive issued to insurers for capping of their business through bank assurance model.
Thanks, Anurag, for getting us that clarity. At least the stocks are recovering from the lows of the day. We'll keep tracking that story more closely as well. But in the meantime, insurance is one space that we posed as a question to even Vikas Khemani earlier in the day, and he sounded fairly positive on the sector. Hear out his take.
Private sector banks, we like public sector banks, especially right now, PSU banks, we think there's a good risk reward. We like insurances. We own life insurance specifically in our business. So again, these are the categories within insurance, both general and life, both under-penetrated category, both have, significant growth ahead of us. So these segments we like, and within that, of course, you have to identify companies, but some of the capital market oriented plays, I feel in a shorter term or medium term have kind of little bit overplayed. So you might see low return in that. But, banks and insurance is something where we can see from next 12 to 18 month perspective, good returns. Though structurally, the whole basket is in good, but these I just mentioned from a medium term perspective, you could see some interplay of returns.
Well, we got this entire insurance space, frankly, if you think about it, has not really lived up to its expectations. Where it was versus where it is. Then COVID happened. Post-COVID, it appeared that it could start making a comeback, but that's not translated into reality, so to speak. We've seen a lot of false starts, Kunal, for this space.
Yeah, false starts and I think real endings for these stocks, because we've not seen any major trend building up. So there was a point, in fact, I think 4 months back, in the month of July or August, somewhere that the likes of HDFC Life, etc., they were coming very close to their lifetime high levels. Yeah, SBI Life had a moment where the stock had made a life highs, managed to break past I think about 1800 odd levels. Last I remember, and I think from there these stocks have slipped. The concern for these stocks is not that the trend is not lasting, but whenever these stocks reverse, the reversal is very sharp. So it's very difficult to hold on to these stocks, even if you've bought them at lower levels and expect that these stocks sooner or later would probably get back into a trending breakout mode. So I think that's the bigger concern for these insurance stocks. They've never gotten to that big breakout on the medium or the longer term charts, and on the way down, these stocks they correct very, very swiftly.
Okay, let's see which way it heads from here on. But time now to take the closing trade ideas. Naresh, you go first.
So continue like Wipro, the stock has come back to those levels of 570, 75, a good entry point. Overall, the structural chart still very positive on it.
Wipro is one IT name that is doing well, and Birlasoft was the other one that you liked. Kunal, what about your pick?
I'll go with Shriram Finance as a buy. The charts are looking a lot more attractive at current levels. In fact, the stock has come back towards a close, potentially about the 20-day moving average if it closes at current levels. So would be keen to be bullish on the stock over the very near term.
Okay, point taken. With that, slipping into a very short break. Don't go anywhere. Last 30 minutes of the trading session. That 3 p.m. move on the expiry day. We'll track that when we come back.
Dadu.
Yes?
What does
Mayuresh Joshi joins us, but before I connect with him, Sensex is down 1,000 points. We've shaved off whatever we gained in the last 20 minutes of trade. Kunal, is this bad news or this can be blamed on expiry?
So of course blamed on expiry, but we've broken below the key support. So 24,000 was a critical support for the Nifty, and we've not closed by. I mean, we may not be closing by a margin of 20-30 points below 24,000. Looking at current levels, we could be closing at a margin of 100 to 150 odd points below the 24,000 mark, and I think that could be a bit concern for the index. The bank Nifty coming below the 52,000 mark. These are two very, very strong support levels for the indices. So maybe at one point it could be that the expiry action is something which causing the markets to behave in this kind of volatile fashion. But the fact of the matter is, that we've broken below the critical support levels, and if we close below this by a margin of 0.5% or so, then I think that doesn't augur very well.
Naresh, will today's price action pour cold water on whatever good things have happened, Naresh, in last 3 days?
So I would wait for a couple of days, because what we've seen is an expiry move. There has been volatility. It's not just the downtick, but the number of tick up and tick down we had. We had 100-pointer moves in 15 minutes. on both sides happening really fast. That clearly indicates that there is some bit of expiry pressure. The margins have gone up on the options. So we'll see it from next day. And also the breadth has not weakened in a major way. The small cap indices are barely in the negative. Same with the mid cap indices. So overall, the breadth is not as bad as the Nifty is. So for now, we take it from tomorrow how it goes.
If you look at the small cap index, it's down just 0.1% versus Nifty, which is down what 1.25%. But let me welcome on board Mayuresh now and take it across to him on IT sector. That's taking quite a bit of beating today, Mayuresh. Infosys is down 3.5%. L&T Tech is down over 3%. HCL Tech, Tech Mahindra. Yes, of course, these stocks have run up as well quite a bit in the last 3 to 4 months. But what's the expectation from here on IT?
Afternoon, Anisha. I think two things happening here. One, I think from a results perspective, a large part of the mid-cap IT basket has performed really well. So even on a higher base, the expectation in terms of how revenue growth will be in constant currency terms was very, very stable. The margins were very, very stable, and the commentaries were surprisingly very, very robust over the next few months and quarters as well. Valuations and late-stage basis obviously is something which is not in favor of mid-cap IT or large-cap IT to a large extent. But I think earnings will keep on continuing growing at a decent pace. The headwind probably is what Trump might probably do in terms of visa curves, so on and so forth. We've seen that in the past as well. And these companies probably adjust themselves pretty well. So in terms of their headcount cost actually going higher, if this transpires as Trump assumes office, I think the IT companies will take that in its stride and probably hedge themselves against the possible disruptions that can take place. Valuations are no doubt expensive, but we continue holding a few stocks like Coforge, Infosys, Persistent in our global portfolios.
Okay, so that's the take on the IT stocks and the way one should look at them right now. But overall, M&M is also coming under quite a bit of pressure today. Kunal, what's the view on M&M? Does it really deserve or merit this 3-4% cut? Because otherwise, that launch is something that everyone is liking. I mean, I'm hearing good things about it, but the stock is taking quite a bit on the chin.
So yeah, I think it's been on a corrective phase the last 3 or 4 days. I think it formed a high just around the 31.40-50 mark for M&M. It's now fallen below the 3,000 levels. I think auto stocks as an overall basket have been a huge underperformer. And even though M&M has been a relatively stronger stock from the entire auto pack, but then I think there's going to be a point where if most of the other auto stocks they continue to show signs of sluggishness or corrective phase, even the stronger ones eventually get back into a mild correction and come back to the retest of the previous swing lows. So I would probably believe that M&M is going through that phase. The near-term support for the stock is now sub the 2,800 levels, which means potentially there could be at least another 100-point correction for the stock before it finds some near-term support for itself.
Muresh, Mahindra and Mahindra is just launching cars after cars after cars. And when they're not launching cars, they are launching motorcycles and scooters. I mean, seriously. I mean, either they're launching cars or scooters. Every 10 days we get an invite saying that, okay, come for a product launch, car launch or a scooter launch. What is happening there?
Probably look at the basket, even within the PV space. The 10 or 12 lakh price tags and vehicles above that are surprisingly held up. Obviously, I think because of the base effect that you're probably seeing, you're going to see some element of stagnation happen over the next few months. But the new launches that Mahindra has done, the kind of features it is offering and the price points at which it is coming at, it is obviously in competition to the entire EV ecosystem in the PV space, largely dominated by the Tata Nexon at this juncture as we speak. But to a large extent, the expectation in terms of the demand outlook stabilizing in the first half in terms of volume growth coming back and in expectations of their farm equipment segment actually holding up and offsetting the kind of stagnation one expects to see in the automotive business is something that can hold up the earnings for Mahindra. Obviously, I think its subsidiaries on an SOTP basis should continue doing well, both in terms of their IT arm, the finance arm. And therefore, I think on a sum of parts basis, earnings should remain stable. Obviously, I think on the core automotive business, the next quarter or two might be sluggish because of the higher base and expectations of recovery coming with a lag effect.
How would you approach Adani group of stocks now, Naresh?
So it's a section of stocks which you generally avoid given the volatility. The only play always has been whenever there has been volatility in Adani Group, you go and buy Adani Ports because that's the one which has the highest institutional holding and tends to come back really fast. And then the next one is to go into Adani Power or you go into Ambuja Cements. So that's the trade I would go with. Even now on dips going forward, Adani Ports would be a buy. The rest of the names would be tough to trade given the volatility.
Mayuresh, has the storm come and gone for Adani Group of stocks? If yes, which is the one which you think one should really buy into?
So I think whether the storm has come or not, Nikunj, I think it might still be some elements in terms of how the elements take place, specifically for the entire group itself. But again, as Naresh was pointing out, I think Adani Ports is one stock which might actually do well going forward as well. Obviously, the kind of numbers that they've been posting so far, we've heard a lot in terms of the mechanization of operations taking place. The acquisitions that they've probably done will also ensure that the mechanization part extends to these acquisitions as well, which means the cost optimization in terms of running the overall operations should relatively get better in the next few quarters. And obviously, I think the optionality that comes through in terms of the excess land that they probably have at this juncture adds to the expected valuations that come through. So I think within the group, I think Adani Ports is one stock that investors can keep on the watch list.
Okay, we'll watch out for that one, at least from the entire pack, because yes, it's been a bit of a volatile ride for that one. Ujjivan Small Finance Bank is doing quite well. IREDA is in focus. Bharat Dynamics has been actually perking up. Rashtra Chemicals, fertilizers too. In fact, Mayuresh, what's the view on PSUs as a pack, especially PSU banks which have started to rally? Would you be, comfortable buying afresh in some of the PSU banks?
Yes, selectively, Anisha. And again, I think if you look at numbers, numbers have been relatively better for the banking system as a whole, including PSU banks. Case in point, Bank of Baroda, the expected numbers in terms of deposit growth, in terms of NIMs, have actually held up for the bank pretty well. The management commentary across the PSU banking universe sounds very, very positive, specifically in terms of recoveries. So what they have provided for in the last few quarters, the asset quality pressure, which have clearly come off even in the previous quarter, and expectations of recovery add directly to the bottom line and therefore improvement in ROEs and ROAs. The deposit base and the legacy accounts that PSU banks sit on, deposit growth should be reasonable for the banks in general. And therefore, I think the print that has probably come through last month, where deposit growth actually has picked up, that can be a huge positive sign. So yes, I think in terms of valuations, in terms of base structures as we see trade markets with India, they look very, very attractive. I think Bank of Baroda, Bank of Maharashtra is something that we keep on continuing holding in our global portfolios.
Watching out for some of those PSU banking names as well. But in the meantime, what else is happening in the market is that pressure continues to build on. Let's see where the Nifty is actually headed at the moment, because there was that sharp correction that had happened. Now we have managed to be just around that 900 mark, but continues to be under pressure at the moment. Acom's drug is down 5%. You have, M&M, which is down, Infosys, L&T Tech, HDFC Life. A lot of these names, including the likes of Titan, Escorts, etc., are under pressure. But Naresh, what's the view on Exide and Amara? Both of these stocks have been holding out quite okay. Exide more so than Amara. Any specific calls that you'd want to give?
So Exide looks interesting for the momentum it has seen in the last two sessions. And the correction has been good enough from 600 odd levels back to 400, 420. So good 30% taken off. Going back to 480 to 500 would be a normal play from here on. So it remains a buy at current levels with a stop loss at 440 and expect to move towards 500.
You on Exide, but of course we are at the fag end of the month of November. Come next week, we'll be staring at December. And what's been the seasonality so far? Are we in for a Santa Claus rally or not? Let me take it across to Sharad to get better sense as to how history has been in the month of December for the markets.
Well, yes, December is generous for the investors and especially the broader indices. Now, for the 10-year average returns, Nifty is given almost 1.4 return. But if you look at the broader indices, especially the Nifty small cap, almost 3% return on a monthly basis, which is coming in. Now, overall, if you look at it, the sectoral indices, they have also been in the green. Largely, if you could see, The numbers coming in is from the Nifty space, Nifty mid cap and Nifty small cap. These are the number of times over the last 10 years we have seen the numbers coming in the green space. Now the sectoral indices, if you look at it, Nifty metal actually leads the pack with almost 4.1% rally coming in, followed by IT, realty, FMCG segment. Now interestingly, if you look at it, all the segments have actually given positive return if you take a 10-year sectoral average as well. Now of course there's a Santa rally concept also which comes in at times in December. And interestingly, if you look at it, over the last 7 times they have closed, that's metal, IT and FMCG coming to the pack. And also the stocks which have closed green at least 9 times out of the last 10 years, they include Polycab, Birlasoft, NMDC, Motherson Sumi and Siemens to name. Lastly, I'd like to point out 2 stocks where these stocks have closed in the red at least 7 times. That is something to watch out for. First is Escorts Kubota and the second is Jubilant Foodworks. So of course, December seasonality would be very important to track.
Okay. It's not a bad day, but it's been a good month in terms of where we were versus we are. See, everything is relative. Right, November, and the first thing I'll say, November, you say, oh my God, what a bad month. FI sold, nothing went our way. But it's only a 2% decline. Now, if I say November, the first impression would be bad, ugly, big fall, paisa lag gaya, portfolio food gaya. You know, all kind of words are being talked about when you talked about November. But Nifty is down only 2%.
Yeah, because I think October was one of the months where the major pain was there. And it was not the correction in terms of percentage in the month of November. I think it was the consistency of sell-off which was happening from the FIIs. I think that broke the back for the markets at one point of time. You know, we were at a point where almost 90% of the stocks, 80-90% of the stocks were reeling below their 50 and their 100 moving averages. At least this relief rally of the last 1,000 odd points has given cushion for many of these stocks to come back again, and some semblance of stability at least in this last 3-4 days.
For me, it is HDFC Bank which I think is the interesting one. In a month when FIs have sold, or in a quarter when the selling has been record high, what is the problem why markets are down? FI selling. All kind of record numbers are there. I mean, the number runs into a couple of $1 billion, 40-45,000 crore in this quarter itself. And for a stock which I think is owned highest by FIIs, over 70% of HDFC Bank is owned by FIs directly and indirectly, whether it is ETF or whether it is direct investments or whether it is alternate investments. In this month, HDFC Bank has hit an all-time high. In this quarter, HDFC Bank has gone against the market. Now, the minute you zoom it out, and again, data is, I can make it look great, but if I zoom it out, 3-year, where has HDFC Bank gone? And we are doing this number crunching with Kunal in the morning. In 3 years, HDFC Bank has just hugged on to a flat line. So just draw a flat line and you would actually see HDFC Bank is just hanging in there. Bank Nifty in last 3 years and this Nifty in last 3 years has given you very different returns. Now that's HDFC Bank for you. In 3 years, it is flat, just flat, and there's no bonus or a split here. It is just flat. Let's look at Nifty in last 3 years and then the Bank Nifty, which is the more appropriate instrument or the benchmark for us to measure it. No, Nifty please. This is HDFC Bank breaking out. If you compare Nifty and the Bank Nifty with HDFC Bank in last 3 years, it has been a massive underperformer. I think my producer is not understanding what I'm trying to say.
40 to 50% rally was there for
the producer has just given a... Now, there you go. Now we are talking 40% return in the Nifty. It's massive underperformance.
Absolutely.
So will the reverse happen now? Sensex will go flat, HDFC Bank will go higher.
No, it could happen. And so there could be a phase where HDFC Bank should outperform, but it depends on the intensity of the market. So what could happen is even if HDFC Bank remains, say, into flattish positive territory, but if the overall indices, benchmark indices, they fall, that kind of a divergence is not what we are looking out for. So we're looking out for divergences where HDFC Bank outperforms and comes back into a very strong trending mode. That factor has been missing. Now, we've typically seen that stocks when they come out, large cap stocks when they come out of their hibernation period, they are generally assisted by moves from the other stocks from the same pack. But the only concern for HDFC Bank is that many of the other private sector banking names are still having their own set of struggles, whether it's the likes of Axis Bank, IndusInd Bank, Kotak Bank. So the concern is that it's heavily dependent on just one stock to try and take the baton forward for the entire banking index, which could be a bit stretched, at least over the near term.
You know, by the way, Adani Green is locked up 10%. I think that's the only Adani stock, Naresh, which is locked up, or are there any other Adani stocks which are locked up? Naresh?
I think there is one more, say, Adani Power has also done well, and there has been Adani Total Gas also, which has made a surprise move today, which has been a total recovery for the stock. So that is a stock which has actually recovered the whole gap down which we saw due to the Adani announcement. So that's the one which has given the biggest move from the day of announcement.
Anisha, I said, I mean,
in the circuit,
on the circuit.
So transmission as well as green are the ones which are locked up in circuit, and Adani gas is 15% higher. So I mean, doing well.
Green is where this entire so-called problem and this whole acquisition indictment came through. And transmission, I think, had something to do with Kenya. They're setting up transmission lines in
one of
Kenya.
those orders was getting cancelled, I think, the Kenya one.
That's been cancelled, I think. That's
I mean, they had put it in abeyance or something at the moment, but I mean, it's a developing story, so it's unfair to, kind of call out anything because things are changing by the minute. We have seen that vote of confidence come from GQG, IHC, etc. There's just one coming up right now as well. So let's see which ways it really goes from here on. But Mayuresh, since you're with us, let me talk to you about a couple of these other buzzers. You have Onasa, which is up 10%, and Ujjivan Small Finance Bank. If you track either, or if you have a recommendation on either.
No, not really. I think Onasa had given a very torrid set of numbers, and therefore I think recovery with urban consumption expected to come down quite significantly. I think it all depends on how numbers will play out. But honestly, I think what we are looking at is BFSI, rural themes, and few rural manufacturing and infra stories as well. So a couple of ideations that we've kept on our watch list is something like a Swaraj Engines as an example. I think very good set of numbers in the last quarter. The entire proxy to rural India, rural spending through tractors can also be played through Swaraj Engines in terms of volume numbers, in terms of PBT, in terms of top line, in terms of profitability. I think they have hit an all-time high as far as reported numbers are concerned. And the expectation is that it might continue doing so. Similarly, I think within the infra theme, Azad Engineering on declines if it does make a base at lower levels. Excellent set of numbers, very, very niche applications that the company probably has. And though the valuations might be a tad bit on the higher side, my own sense is competition is very, very restricted to the kind of products that it probably makes, and other things should remain very, very stable.
Okay, point taken. That's the view coming in on a couple of sectors and stocks which are on Mayuresh's watch list. But time now to get the watch list from our technical experts as well. Kunal, what's the BTSC trade, if any?
So two buy calls. The first one is more of a contra buy on Pyramid Enterprise. The stock in the last 2 days has corrected by a margin of 4-5%, almost from 1225 to 1175. So I think at current levels, the risk reward is attractive to go for a buy. Targets of 1240, stop loss at 1140. And Bharat Electronics has been the other stock which has done exceptionally well. The stock is at a swing breakout. So I think even if it closes at 305 plus levels, it could be a fresh swing breakout for Bharat Electronics. So buy with a target of 320, stop loss at 297.
Okay, and Naresh, what's your top recommendation as a BTSC trade or STBT trade today?
So first would be a buy on Wipro, continue like at this price, stop loss at 565, target price of 590. Second would be a buy on LIC Housing Finance, which has made a strong base around the 600, 620 mark and is on verge of a breakout. Stop loss at 625, target price of 645.
Point taken. So that's the view coming in as BTSC trade. But Kunal, if I had to ask you about what does it seem like as far as December series is concerned, the setup that we have at our hand, the seasonality that we talked about, what is your own expectation as to where we are headed in December?
So at least the market should be stable. I don't expect the kind of volatility which we've seen over the last 2 months, specifically the month of October and the first half of the month of November. I don't expect that kind of a volatility to come back again into the indices, at least over the very near term. We've seen December historically as also a month where the trading activity drops down, especially in the second half of the month of December. So I think, and over the last 2 months, the concern for the markets was very heavy liquidity. So I think even if the trading volume drops down, eventually, the markets would probably get back into a settling of a range. Now, one of the data points which is very, very important, which we've looked out for is that the small cap end of the market is seeing a lot more stocks in the oversold territory right now. So almost 80 to 85% of the stocks are now trading below their 50 and their 100 moving averages in the small cap index. So I would probably believe that we are heading into a zone where the indices would stabilize and the market breadth would start to improve like what we've seen today. And that's where small caps they tend to outperform.
Okay, small cap outperformance. That's what Kunal is betting on. But before I hand it to Snehi for the closing trade, Mayuresh, wanted your takes. Large cap, mid cap, small cap. Where would you put your money to work?
Electively, I think large and mid caps, Anisha. I think that's where I think the meat of the alpha generation lies. But yeah, I think a mix of both where leadership probably exists.
That's a view coming in as far as the large cap, mid cap, small cap trends are concerned. With that, I'll let you go, gentlemen. Thanks so much for making time and speaking with us. Closing trades nearing bad. It's been a decent kind of expiry and month, and I say that because after the kind of drubbing that we saw in October, it was very excruciating. It was boring. It was sideways. Tested the patience of a lot of traders, but we are ending in the red for this series. Second consecutive series wherein we have been drowned by over 1%. Adani Enterprises, Asian Paints, these were some of the big losers in this series. But for the rest of the takeaways for today and the series, let me hand it over to Snehi.
Well, absolutely. Let's take a look at how the market session has panned out today. It's been a rather choppy trading day for us. A 1.3% cut coming in on the Nifty below the 24,000 mark, and we're just close to the 23,950 mark as well. Sensex also following suit, 1.3% cut coming in on the Sensex as well, below that 80,000 mark. If you take a look at the broader markets, however, mid-cap has managed to hold on to the green by the skin of its teeth, just a 110% hike coming in, and same can be said for the small cap index as well. If you take a look at the advanced decline ratio, rather evenly spread, just slightly tilting in the favor of the advances. India Wix, let's pull up India Wix and take a look at what India Wix has done today, because it's been a 3% uptick coming in on India Wix today as well. Let's talk about some individual gainers and losers in today's trade then. And if you talk about some stocks today, HDFC Bank was in focus today for multiple reasons, and that stock held up pretty well today. In fact, but it managed to, could not hold on to those levels, and it's slipped into the negative 1% cut coming in on HDFC Bank as well. There's an all-time high coming in for HDFC Bank today. Other than that, KC International was another stock that was in focus on the back of auto wins, and also an all-time high coming for KC International as well. That stock is held up pretty well, 2.5%, 2.4% uptick coming in on KC International as well. But let's talk about some other gainers and losers in today's trade. You have BEML that was in focus on the back of a contract win coming in worth 3,650 crores. So big order win coming in. That stock was up 2%. Ashoka Buildcon in focus on the back of an auto win as well, 193 crores. So that stock also did pretty well today. NTPC Green Energy was in focus on the back of the part commercialization of the operations that they've begun in the Madhya Pradesh unit. So that stock held up pretty smartly. In fact, very newly listed company, and 4.6% uptick coming in on that stock as well. Putco NBCC on the back of the MOU they've signed. Ujjivan Small Finance Bank was in focus on the back of the transfer of their stressed loans portfolio to an ARC. Nazara Tech was in focus. You also had Canara Bank, where all eyes were today on the back of some brokerage notes. Then CLSA had come out with a note on Bharti Airtel, so Airtel was in focus. You have Amber Enterprises, Goldman Sachs was in focus on the back of a downgrade coming in, so that stock did not do well at all in today's trade. In fact, a 7.5% cut on that stock, roughly 500 points lower. You also have BofA coming in on Pharma, Bank of America on the Pharma, so the entire Pharma space was in focus today. UBS on Paytm. Now Paytm was another high flyer in today's trade. That stock seems to have done pretty well because they've hiked the target price to 1,000 rupees, 1.5% uptick coming in on Paytm as well. Lastly, let's talk about Goldman Sachs on Marico. Marico was in focus. They've maintained a buy rating with a target price of 720. So that stock also was in focus, but didn't do much, 0.8% cut coming in. SpiceJet was another high flyer in today's trade after the issues with the lender have got settled now. So that stock did pretty well. But if you take a look at some sectoral gainers and losers, you have IT that was the big loser. Remember, IT has been doing well so far, but all the constituents in the IT index were in the red, and also auto was in the red as well today. In fact, most indices barring just some were in the red and have closed the day in the red, but that's how we shut shop for the Nifty. A 1.3% cut coming in, and below 24,000 is where we have closed for the day.
If you like this video, then like, share and subscribe to ET Now.